Thanks everyone for joining. I see a bunch of you on. We appreciate you taking the time out of your day. My name is Michael. I'm gonna be your host, if you will, today. What we're gonna do here, just to lay the stage for everyone, is I'm gonna introduce myself and Brian, who's gonna be joining us, and then I'm gonna do a brief, kind of very high-level overview of equity crowdfunding, kind of some of the stuff we're up to at Indiegogo, and then the more exciting stuff, we're going to talk to Brian about what he's up to with his company, Play Impossible, and how he used equity crowdfunding, etc. And then we're going to open up for Q&A from you guys. So please, you'll see in the chat, you can submit questions throughout. My team's going to be kind of pouring through those and pulling out some of the good questions, but don't hesitate to just keep writing in as many questions as you want. And I know Brian and I both want to leave as much time as possible for questions, because I'm sure that's part of why you're here. So cool. So let's get into it. So just some introductions first. My name is Michael Hughes. I'm a senior director of equity crowdfunding and also token sales, which I'll mention in just a second. But I've been at Indiegogo for about 3 years and kind of done every shape and color of crowdfunding. So that's where I come in here. Brian, I'll let you. I'll introduce Brian. He's going to jump in a second. Or Brian, are you on? You want to say a quick hello?
Yeah, that's great. Thanks, Michael, and hi, everyone. I'm Brian Monin, the co-founder and CEO of Play Impossible. Psyched to be here today and to share a bit of my story.
Awesome. Thanks, Brian. So I'll keep this short, everyone, like I said, but I just want to quickly do kind of a high level here. So some of you hopefully are familiar with Indiegogo. We invented this whole crowdfunding game in 2008 when we launched. 2008 was a very different period on the internet, as we all know, but particularly in crowdfunding. For one, it didn't exist, so it wasn't called crowdfunding. We had 3 co-founders who came together in 2008, actually before that, and had this idea of empowering the crowd or the community to invest into startups or companies. Believe it or not, it seems crazy to think, but that actually wasn't legal. You weren't allowed to do that, take investment from just old anyone. You had to only do it in a traditional sense from what are called accredited investors, which is a fancy name for wealthy people, which is a very, very small percentage of the US population in particular. Nothing wrong with that, but it kind of kept out most people. So long story short, the co-founders created what a lot of you probably now know as what we call rewards or perks-based crowdfunding. So Indiegogo and Kickstarter and many others have been extremely successful over the last decade, where you put up a product or a project and people contribute money. They're not actually investing in your company, but they are contributing money to your project and maybe getting a perk, i.e. an early bird product or a t-shirt or something special like that. So we've had a lot of success with that. Fast forward to 2016, the Jobs Act came under Obama. Things take a while in the government, as we all know, but the one we were really waiting for is something called regulation crowdfunding, or Title III of the Jobs Act. That passed in 2016. And again, very high level, but what that now allowed for is now anyone at all can invest here in the US, not just those accredited investors I mentioned. So sort of a game changer, exactly what we were waiting for. So we got into what's now called equity crowdfunding, what I like to call crowd investing. In late 2016, we launched our platform. And I'm going to get into how we did that and why, but I just want to give some backstory there that this is sort of 10 years in the making for us and wasn't something that we just did overnight. So in order to do that, just for some context, Indiegogo, again, we have a lot of experience in crowdfunding and marketing, and we have a global audience, et cetera. Like I said, we've now done well over $1.5 billion actually in perks-based crowdfunding in every country and territory on the planet. You'll see there that over 250,000 people have actually raised money with us. Many more have launched campaigns. So that's gone pretty well. We're pretty excited about that and pretty proud of that. But in order to do equity crowdfunding, just because it's called crowdfunding, it's a very different business. It's heavily regulated. We're talking actual investments. etc. So long story short, we ended up partnering with a company called Microventures. Microventures is based in Austin, Texas. As you see there, they launched in 2011. They've been doing this for quite a while. What they've been doing is equity crowdfunding from accredited investors only. So they've been doing what's called Regulation D offerings, kind of behind closed doors. Only accredited people were allowed to view the deals and invest in the deals. They're very good at it, and they've had a lot of success with it. I think these stats are actually old now. I think they've done a lot more than that, and they continue to be successful with that. But Indiegogo Microventures decided to join up. So we formed a joint venture in 2016 when we launched our equity crowdfunding platform. So in essence, you can think of it as Indiegogo. Again, we bring the brand, the knowledge, the crowdfunding knowledge, the marketing, the global reach, and Microventures brings all of their expertise to the table in due diligence and compliance and processing investments and et cetera, et cetera. So it's a really great partnership. We're very pleased with it. These guys really know what they're doing, and you can go check out their website as well for their impressive portfolio. Again, so just by the numbers, again, things have gone quite well. So just to give you kind of an idea, we've only been doing this for about a year and a half. It's still very much test in my mind, but it's gone quite well. We've raised over $12 million in investments. So again, that may not sound like a lot in the perks crowdfunding world compared to billions, but that's $12 million of actual investment into small companies and startups. We've had over 17,000 actual investments, and again, these investments, the interesting thing is they're coming from all over the world. So I should mention that too. The companies have to be incorporated in the U.S., but the investments are coming from all over the world, and maybe Brian can speak to that as well. But it's been really exciting to see. We've launched over 40 offerings now. We have a lot more coming. Our average raise is about $300,000 to date. And the thing we're really proud about, we've had a really, really strong success rate. We've funded over 90% of the offerings that we've launched have hit at least their minimum goal. You have a minimum goal and a maximum goal, and many of them have actually been oversubscribed at their maximum goal. So pretty proud of that. And yeah, next slide, I think. Yeah, so this has been in all different verticals too. So obviously Brian is in sort of the hardware technology space. He'll get into that in a second. We love those companies, but we've been really impressed and really excited about, we didn't know what would work going into this. We didn't want to pretend like we knew what we were talking about, but we've tested films, we've done gaming company, video games, we've done food and beverage, we've done distilleries, breweries, we've done media companies, you name it, we've done it, and they've all been successful. So this equity crowdfunding truly is for any type of business that's looking for funding and wants to leverage their community. I'm going to stop talking soon, I promise. Just a couple more, then we get to Brian and his super interesting story. But just really quick, we always get this question about equity crowdfunding, and so I already how is it different than other types of fundraising? So I mentioned it before, but perks-based or rewards-based crowdfunding is what a lot of you know as Indiegogo or Kickstarter. Again, that's not an investment. You're actually just contributing money early on to either pre-order a product, like Brian's product, for example. You could pre-order that at a discount. Or you're contributing money to a film or a art project, whatever, and they're rewarding you with some sort of good. So if it's not a product, then a T-shirt or a discounted ticket or something like that. Obviously, venture capital. We get asked a lot, well, how is this different than venture capital? I could go on forever. I'd like to mention a few things here. Is like, one, I believe I just looked at some stats. I think it's something like less than 1%. Or well less than 1% of companies get funded by venture capital. And that's not a bad thing. It just means that venture capital gets a lot of hype, and it's not a bad avenue at all. We have lots of venture capitalists invested in Indiegogo, but it's not a great fit for most companies, believe it or not. So venture capital actually isn't an avenue for most people. A lot of them are looking for incredible growth numbers already. They're looking for experienced teams. That you'll hear from Brian in a second, things like that, but that's not necessarily everyone. And then if you're a small business like a restaurant or distillery or film, they just don't invest in those things, and that's okay. But where else do those people turn for funding? There's bank loans, right? But a lot of you have probably felt the pain of this, where bank loans, you actually need 2 years of financials typically to get a bank loan. Well, what if you've only been open for 6 months? right? So we've actually funded some distilleries, for example, that have only been open for 6 months, but had some really good growth trajectory, and they were able to raise lots of money from their community, so they didn't have to go to the banks, and they would never go to a venture capitalist because it's just not a good fit for venture capitalists, and vice versa, and that's okay. The last thing I'll mention, and Brian will definitely get into this more, I hope, it's not mutually exclusive. That's a really important point here. We're actually, in particular, we love companies that, if you can raise money from a VC or angels, et cetera, and you're taking strategic money there, great, you should do that. It's a great sign to us, right? It's someone believes in you. These are professional investors. They're going to add, strategic advice and help to your company. But believe it or not, equity crowdfunding can help augment a raise, right? So by that I mean, like, let's say you raised $1 million and you've already raised half of that from VCs and more traditional investors. Equity crowdfunding might be a great way to kind of fill in the rest of that round or top off the round. And what's cool about that is you're giving your community the same terms as those investors, the more experienced investors, so they get to come in on the same round. And in my mind, what I love about it is your community is why you exist, right? They're buying your product, they're buying your service, et cetera. They're supporting you. You're giving them a real stake in sort of the potential upside of your company. So obviously I'm biased, but just keep that in mind, and we get that a lot. It doesn't have to be mutually exclusive with traditional types of venture capital. It could be a great way to add on to it. So I think that's really important. Almost done here, but I don't want to go in the weeds on this too much. There's a bunch of different types of equity crowdfunding. I'm happy to talk with anyone, your case in particular, after, but there's something, like I said, Reg CF, or regulation crowdfunding. That's the one we're most focused on. That one allows you to raise up to 1.07 million from anyone at all in a 12-month period. There is something known as Reg A Plus that you may have heard of. That allows you to raise up to 50 million from anyone in a 12-month period. But kind of the highlight there is Reg A Plus is very expensive to do. It's a lot of legal paperwork and time. It's not a bad fit for the right company, but you probably have to be a lot later stage and have a lot, deeper pockets in order to even approach that type of raise. So Reg D, and then again, that's MicroVentures, our partner bread and butter business, where that's accredited investors only. One thing I'll highlight there is we do have the capability, because of our partnership with MicroVentures, to do both, where in theory, we could raise more than the 1.07 million from regulation crowdfunding by combining a Reg CF raise with a Reg D raise. It would just have to be accredited investors only after the Reg CF was filled up. So I won't say too much more there, but so last thing on my part, I want to turn it over to Brian. But so again, Indiegogo, I mean, I kind of mentioned a lot of this already, but we've been really pleased with the last year and a half. We're really excited about the future of equity crowdfunding. This is what we wanted to do for a decade. We think that anyone, anywhere, every company in every vertical should be allowed to easily raise money, and what better way to do it than to open it up to a wide of audience as possible. So you get our Indiegogo's global reach across the globe. You also get MicroVentures, by the way, their entire audience. And compliance, right? This is very complicated stuff, very regulated. That's why we have MicroVentures. You're going to know that you're doing this right. You're doing it compliantly. You don't have to worry about that. We take that off your plate. And we're very selective. We chose Brian for a reason. We'll get into that in a second. But we actually say no more than we say yes. And that's not because we don't want to help everyone. We would love to. But we want to make sure that these are, what we deem as, good investments, right? There's still risk, and all investments are risky. I got to highlight that there, right? My lawyers will be happy. But we're definitely doing our homework and our diligence to make sure that there's quality companies on our site. And then as the issuer or as the company raising money, that you're part of that group. So you're not just like one of 100. You're one of a very select group of companies, and we really partner together. The marketing I mentioned, and then again, accredited and non-accredited, meaning anyone. You can actually raise money from your buddy can put in $100, or someone else can put in $100,000. It's really anyone, and that's really what's special. And then the final thing we add is we've done this for, again, a decade on the perk side, and we know that this stuff's complicated and hard, so we actually provide, once you're working with us, you have a full-time dedicated person. Think of them like a strategist on marketing or an account manager to really help you with any questions or issues, and their entire job is to make sure that you're getting what you need and you're set up for success. So we really provide that personalized support. And I think that's really critical, but I'll let Brian comment on that. I'm sure he has comments there too. So I lied. Last one. So just very quickly, some idea we've done. Play Impossible. You're going to hear a lot about. Brian was one of our first batch back in 2016. We had never done this at all, so he took a risk as well, and we appreciate that. And you'll see some other ones we've done. We've done med tech companies. They raised over $1 million for this really cool cancer detection. We've done a company that is building a better prosthetic arm. We did Napa Valley Distillery, right? A really cool distillery here in the Bay Area. Then Pawprint, awesome company that's putting pet records, just like medical records, into an app and making it simple. Came out of 500 startups, amazing female founder. Again, we really want this to be for everyone. So just kind of give you an idea of some of the things we've done. But you can check all those out at equity.indiegogo.com. All right, so I'm gonna hand over the reins to Brian, I believe, and I think we're gonna start off with a video, but all you, Brian.
Great. Thanks, Michael. And just to kind of open it up, the first thing I'll say is, God, did we need help? In 2016, we were, at the time, maybe a 3.5, person company, with a novel idea, and the 3.5 people, had been in technology and media and hardware for their whole careers, but this was a new venture. And we were really trying to raise funds in a variety of ways. We felt we had something exciting. Our mission is motion, that we felt that in this day and age that players, people, humans of all ages are just too idle and too solitary. And for us, we wanted to introduce a product. It's really a game controller that hides a miniature PC, a printed circuit board inside a ball. And we felt that novel idea would get people off the couch, would get them off their butts, would get them moving. But it didn't match patterns from traditional VCs. It wasn't AR, VR. It wasn't, a category that they felt comfortable with. But we felt we had something, and we were getting good responses in our early tests, but we needed help. We needed to get the word out. And not only did we need to get the word out, but we needed long-term advocates. We needed the ability to take this seed of an idea and let it germinate. And so, for us, when we started talking to Michael, we were a little nervous, frankly, about the timing. We were nervous because we, had not understood the laws of true crowd equity fundraising, and we didn't have much of a history. And we'll talk a little bit more about the pros and cons of that. But one of the things we did know about Indiegogo was their deep relationships, with consumers who are interested in founder stories like ours, in innovative new products like ours. And we knew they could help us, get the word out. And so we really were excited to give it a try. They promised, as Michael, mentioned, to be consigliores, to be mentors, to be constant helpers in figuring out crowd equity fundraising together. And truly, they were. As busy as you are as an entrepreneur, they respected and made time and were never curt and always helpful. It's never perfect in any aspect of a startup. And this is no exception, but gosh, if they weren't consistent and really committed to a positive outcome. And some of those things, those help, the pieces of help you get are not only about the laws and regulations, but they're also about how to market and promote, how to package this, how to become equity storytellers as well as product storytellers, and those are really two different things. It does make a huge bit of difference to help tell your story to have a great video, and that's true of selling a product, but also of selling a company vision. And that's the difference. You're not just trying to get a potential investor to buy the product and then give you a good review. You're kind of stuck with them. So the story, and vice versa, the story you're telling them is really more about, not only the product benefits, what the company is investing in. And if you're a company that's setting yourself up for long-term growth, you want to be more than a one-trick pony. And so you're, telling the story of the founders, you're telling the story of your underlying technology or services. And Indiegogo is quite excellent, at storytelling. And I think making that distinction between product storytelling and company storytelling is important, and you need help there. I guarantee it. So we did, make an investment in video, and sometimes that's painful, and sometimes you get lucky because you know somebody, but it is worth it to take that little extra time, little extra expense on the video. And then Indiegogo really stepped forward and promoted. I mean, they have an incredible set of channels to reach prospective investors, and it was something that was immediately felt. And for us, we were starting at zero, literally zero, and so and entering in a direct to consumer marketplace, getting our name out there was incredibly valuable. Now I will caveat that by saying I would not recommend that you do a crowd equity fundraise if you have zero emails or zero followers. We took a chance because we had a couple of good reviews and we felt positive that this was worth trying now, and we needed the money at that point, or the potential of that money. But I would recommend building 10,000 strong email databases prior to getting going. But that marketing promotion was hugely helpful. Now, microventures that Michael mentioned, these guys and women at microventures have deep experience in the venture community, and a big part and one of the unpleasant realities of that is that there's a mountain of documentation and legal documents that you need to become proficient at reviewing and making quick and accurate decisions about. And the microventures team they were simply outstanding. The perfect complement, in my opinion, to Indiegogo's storytelling and marketing prowess. Microventures really, understood and walked you through, at late hours on email, in person on the phone, the details that you need to understand to make sure that the signature that you're putting on these contracts is not only upheld but true, and that doesn't expose you to dangers down the line as business owners. So that legal compliance is not only important. I suspect you'll come out smarter than you were going in, which is an important part of it. So I would recommend strongly building that community prior to doing it. And again, I just want to caveat this by saying we were an early stage hardware plus software startup. As Michael mentioned, there are other types of businesses, restaurants, entertainment, that's not going to be an apples to apples match to our experience. But for us, it was critical because every month of funding matters. Whether you have 3.5 people or 30 people, you don't want to be that month where you run out of runway. You want it to be that month where you had just enough cash or even excess to take advantage of that new growth opportunity, or getting those products out the door, or those reviews coming in. And so for us, we had a modest goal of 50,000 because at that stage we were looking at a prototype product built, and we raised about 150, and it was incredibly important in those orders of operation to have that capital. The other thing that it led, and this was a litmus test for us, is we wanted investors who are also going to be advocates for us. That a big part of our challenge was getting the word out of who is Play Impossible. What is the game ball? Why is it important that families get up off their duff and play with their kids and rediscover their backyards, and engage in gaming in a new and physical way, instead of just tapping with their thumbs. And these are tough stories to tell because it's new, but those close to, I think, 200 or so investors who came in on our campaign, they became advocates for us. They got the word out when we had new press or new releases out there. And all of those things, matter as you're really, driving towards, getting your products, to market. And so last year, from 2016 through 2017, we had this amazing opportunity to enter into Target across the country, and then also with Amazon Launchpad, and we had terrific first holiday of sales. We're about to announce in the next couple of weeks a new worldwide distribution partner that we can't announce right now, but again, it goes back to being able to have that capital, to having those advocates, and increased savvy about how to run your business, that we're in a position to do so. Now, that was part of it. As any startup, you have to be wily, you have to be flexible. Crowd equity fundraising was one part of our equation, an important part, but we also did ultimately take venture funding from traditional VCs, Two Sigma Ventures and Hardware Club specifically. And that experience of crowd equity fundraising, frankly, helped me in negotiating and building strong partnerships with those VCs. So I don't want to underestimate or undervalue the knowledge and savvy you get on equity in general by participating if it's a good fit for you as well. But again, I think it can be done in a variety of ways, and you can also use traditional VC to great effect as well.
Awesome, Brian. Hey, Brian, I want to give you a quick second. Can you just quickly tell everyone, high level, what you're doing at Play Impossible, what you guys do, and then what you guys play your little video after that. And then we'll get into Q&A for everyone.
Yeah, I mean, going back, the Play Impossible game ball is a 5-inch inflatable with a printed circuit board inside. It's a game controller that connects wirelessly to your favorite device, whether it's iPhone, Android, Apple TV, or others. And again, the objective is to really, get you up, throwing, catching, running, spinning, playing games in a way that's active, and not just, on the couch, with your thumbs. And our first product is the Play Impossible Game Ball, which was a $99 retail product this holiday, and soon to be, available worldwide.
Amazing. And I'll just my personal comment, take my Indiegogo hat off. I had one child when I met Brian, now I have two. And, what I love about this product, obviously I'm biased, but like Brian said, I mean, in this world of tech and screens, and it's just a perfect complement of saying, look, we're not going to deny that kids love tech and want to use it and all of that, but this is a great way to get them outside and get them moving. And I know there'll be some game balls in my house very soon, so it's pretty cool. So I'm going to show you guys a video just really quickly that Brian actually had mentioned, not just to show you, get you a feel for what the game ball is, but this is, Brian's team did a great job of creating a lot of good content, like you said, and really showing people, what they're investing in, and particularly for a product where they want something to chew on. So we'll check this out, and then I know there's a ton of questions coming in, so that's awesome. We have plenty of time left, so we're going to get to that in just a second, but here we go.
Hey, can I play?
Okay, toss it up. Now change things. You just double tap it. Here, let's do water balloons. Woo! Caught it too hard.
It's there!
All right, I'm back. Awesome, yeah. Go check it out. Game Ball, Target, etc. online. It's pretty cool, and Brian has one of those few products you really have to see it in person to get it. I remember when he first came to the office, and again, this was just a prototype at the time, but I didn't fully get it when they described it to me on the phone, and then they came and showed me, and I was like, wow, this is amazing. So, shameless plug, but I'll do it on Brian's behalf. I think it's pretty cool.
Yeah, thanks for that. Yeah, please check us out on playimpossible.com.
Cool. All right, we're gonna get to questions, guys. Actually, Brian, I have one question for you first, and then we're gonna kind of mix it up. I know there's a ton of questions, guys. So we're gonna get to as many as we can. So Brian, you mentioned that you were just kind of circling other investors. You were super early when you came to us. Zero. But what was that thought process like to say? Did you have something in mind? Like we're gonna hey, is there a way to reserve a part of this crowd and do it with traditional VC? Did you have no idea going in? What was the thought process like there?
Yeah, I mean, I think it's important that you and your co-founders, if you have them, really get versed on the glossaries and language of cap tables, to really understand, what's at stake, literally, what percentage you own, and then what might it look like after you successfully bring in new shareholders. So, we knew that we had allotted a certain percentage of the company for fundraising. And so we certainly felt that the future funds that come from crowd equity would fit into that. So we did, have, a ballpark percentage, and that's just going to be different depending on the company you have. It's not uncommon in each round of financing. You might have heard of Series C, Series A, or Series B, but it's not uncommon to reserve 20 to 25%, maybe even 30% of your company for new investors, and so that meaning of the percentage, 25 or 30%, solely depends on the structure of your company.
Got it. I'm seeing a lot of questions on can a company outside of the U.S. raise on our equity crowdfunding platform? So, great question. I hinted at it before, but let me make it more clear. So, with the regulation crowdfunding, or Title III, the one we're mainly focused on, where you can raise that 1.07 million from anyone. This is a U.S. thing. It was created in the U.S. For better or for worse, the rules say, the laws say, I should say, the company needs to be incorporated in the U.S. So I'm not a lawyer. I'm not going to get into the specifics, but I will tell you that we're very open to companies to be incorporated in the U.S., but they don't necessarily have to have all of their business operations in the U.S. So what that means for all of you that are outside the U.S., not that it's easy, but to keep it at a very high level for the webinar, if you have a U.S. entity, and that entity, potentially maybe is the parent company or owns a piece of the foreign parent, you still can use our equity crowdfunding platform. We just aren't allowed to have our investors invest directly into a foreign entity. It has to be into a U.S. entity. So the answer is yes, you can do it. It's a little complicated, but we're more than happy, and we've had some great companies that are already in the pipeline that are from outside the U.S. So don't let that stop you if this is of interest. What else? So a lot of questions. I'm going to try to get to them all, but right. So this one comes from David. Like, if you've already raised an angel investment at a certain valuation of $1 million, for example, how does that relate to equity crowdfunding? In other words, can I now arbitrarily value my company at $3 million? Can I raise without an inferred company value? Great question. So again, this, like as I mentioned before, it doesn't have to be mutually exclusive with traditional types of fundraising from angels or VCs. In this scenario, it depends. If you're in the middle of a round that you're raising and it's still open, and there's certain terms on that round, and you want to maybe open up a piece of that current round to the crowd through this platform, then obviously we would want our investors to get the same terms because they're investing in the same round. If you finished your round, for example, a year ago or 6 months ago, and you've made some significant progress on the business, et cetera, how the terms evaluation work is you come to us with a proposed terms, and in my team's review, we'll look at it and either say yes, that sounds reasonable, great, or we'll give you feedback and say, hey, honestly, we think that valuation is a little bit too high. We think we could help you be more successful at X valuation. So it's really a discussion. Our goal, again, is always to help you be successful. It's not about us getting the best terms. It's just we know what works with our community, and particularly MicroVentures' experience with accredited investors and what they're looking for. So it's a discussion. So partly it's a discussion between you and us, and partly it depends if you currently have a round open or this is a brand new round. So hopefully that answers that question. Other question here, incorporates a C Corp only, or does the platform work with other types of orgs, B Corp, etc.? Great question. We actually can raise for pretty much I should say, any type of entity. So a C Corp is great and very common, as you know, probably the easiest thing to raise for logistically, but we can raise for LLCs, C Corps, B Corps, public benefit corporations, etc. All of those are possible for anything other than those popular structures. Again, I'm not a lawyer, but we're happy to run it by the team to see what's possible. It just has to meet with the law and the regulations. But yes, most common structures are a possibility. Trying to think, Brian, there's a lot of questions here for you.
Yeah, I'll take one. I'll read a couple and I'll take one, Michael. Why don't you mute for a second so we don't have an echo? Yep. A couple of questions I'm seeing here is, how much equity did we give up, and how do you determine valuation? So even with a Reg C, a crowd equity fundraise, there's a couple different ways that you can take that to market. Depending on whether you're authorizing a preferred round of funding or not, you've heard of things like seed, Series A, Series B. It means you're allocating rights that are special to this group of investors. Another way, and that's called a preferred round of fundraising. And generally speaking, the valuation of a preferred round of fundraising is determined by your lead investor. That is, the person who's putting the most money in essentially has a group of analysts and says, we think that the pre-money valuation is worth $1 million. And then if you raised 500, your new post-money valuation would be $1.5 million. I encourage you to Google valuations and how to determine preferred valuations, as you'll learn a lot, and there's a lot of good resources out there. And it all depends. It's really kind of up to you and your board and your lead investor to determine that valuation. Now, we opted at the time to do what's called a safe round of financing, or a simple agreement for future equity. This is something that an organization called YC Combinator made popular about 5 or 6 years ago. And it operates like a convertible note, which means it's essentially debt that you take on that will convert into preferred value at some point in the future. So there's a couple different ways you can go about it. You really do need to have a discussion with your co-founders, if you have a board, your board members, the lead investor, and attorneys. Now, again, as Michael mentioned, his team and the MicroVentures team will help guide you through that, depending on where you are.
Awesome, thanks, Brian. I'm going to go to a couple others here. So yeah, great question here. So I should be clear, when you go to equity.indiegogo.com, by the way, that's where you can go check out the offerings we've done. You can apply. There is an application process. I'm kind of going to answer a bunch of questions at once here. Like I said, we're very selective for a bunch of different reasons that I mentioned, but we definitely encourage anyone at all to apply. We look at every application, we review them, so don't hesitate to just reach out to the website if this is of interest. And First Democracy VC, some people asked about that. That's a great question. I should have mentioned that before. When Indiegogo and Microventures formed this joint venture, the name of that joint venture is First Democracy VC. So great question. It's not a VC firm or something else. It's like that actually is the name of our joint venture. So you're doing this raise with First Democracy VC, which is both Indiegogo and Microventures. And then that leads to the fee questions, which I think is all interrelated here, but you're only, the fees are only getting paid once. You're not paying Indiegogo, then you're paying Microventures, you're paying First Democracy VC. So I'll just very quickly high level on the fees. Happy to talk with anyone about this, but so Brian can attest to this. There's a lot of paperwork, as he said, to do this, to even set up a Reg CF raise. We have to do a financial review of your company with an independent CPA. We'll connect you with some that we work with, but if you're raising more than $107,000, that's required by law. That can cost a few $1,000s. We have to open up escrow to collect the investments, hold the investments in. We have to file, as Brian mentioned, something called a Form C, as in cat, with the SEC. We use a service called iDisclose to do that. Kind of getting in the weeds, but just to show you what I'm getting at is there are some upfront costs just to do this type of fundraising. Every type of fundraising costs money, costs money to raise money. We've gotten those fees as low as we can. We don't make money off of that, but we do pass those costs on to you. So on average, those upfront costs have been about 6 to 7K. Kind of depends on the financial review. That's the variable cost, but we will just pass those costs on to you. Exactly what it costs, you'll pay. When that's said and done, everything's good to go. The raise itself, there's two fees. We take 7% commission based on how much you raise, and 2% equity based on how much you raise. So there's a lot of nuances to that. I'm just going to use the most simple example. If you're doing an equity raise, you raise $100,000, you get $93,000. We take $7,000 in commission fees, and then you also issue us $2,000, 2% of what we raised, in equity in your company at the same terms as the raise. So a little bit of upside for us, but also the point of that is so that we're all aligned, right? So when we work with someone, we really go to bat. And again, as you can see, both of those fees are based off of success. So the more success you have, the more success we have, and everyone's fully aligned, and make sure we can raise as much as possible. That's fees. It's on the website, but hopefully that's helpful. What else? Brian, if you want to jump in if you see any that relate to you. Oh, Brian, question for you. How do you manage 200 plus investors, or can you talk about your experience there, or how that works, like updates to investors, et cetera?
Yeah, I mean, that's really a war of attrition. I mean, you really, you're going to get a wide variety of savvy and questions. Ultimately, just, what doesn't kill you makes you stronger. So we use an email client, I keep a list and try to send them certainly quarterly updates, in some periods of time, month updates. And I, think it's important to be, as radically transparent with investors as possible. There's an urge and pressure that you feel as an entrepreneur to only deliver good news, but that's just not realistic. Startups are hard. You've heard, the comparison to roller coasters, and it's, roller coasters that are falling into the sea, on some quarters. So you need to be honest, in my opinion, and upfront, because you want this group to be with you through thick and thin, and to work towards the grand prize of, not only delivering products that meet your mission, but, some sort of liquidity event, or exit in the future. So I think, use your email management tool or, private Slack channel of choice, but just, communicate with them early and often. I think just looking through on other questions, on the specifics to the Democracy VC offer, we really had, something that incented with convertible notes or safe offers. You usually have a discount, meaning that if there's a 20% discount, they're getting an added, for $10 in, they're getting another $1 when it converts into the series round of financing, for example. So you're generally going to have some sort of upside or discount to people coming in if it's a safe account. And the other thing is that the vast majority that we found were people who invested less than we had several that put in tens of thousands of dollars, but most were in the kind of $100 to $900 range.
Awesome. I'm seeing a question from Jonathan about how does it work for investors. Great question. You're right. We've been talking about the issuer or the company raising money. Thanks for that. Yeah, let me be clear there. So our platform in particular, the minimum investment on our platform is $100. Every offering, so like Play Impossible's offering, for example, it's a discussion between the company and us. We could set that minimum investment higher than 100 if we wanted to, but typically we keep it pretty close to 100, either at 100 or close to that. And the reason for that, again, is simple. It's the whole point of this is anyone truly can invest. And $100 might be a lot to someone, but just because the minimum investment is $100, that doesn't mean you can't put in $100,000 if you have done your homework and you really want to and you're a savvy investor. So we've seen actually over time, about a year and a half, it's still pretty limited data, but the average investment is creeping towards about $1,000, believe it or not. I think it's at like 700 something last time I checked. Now, as Brian mentioned, it depends on the vertical, right? Investments in a distillery are going to be quite different than investments in like a tech company. But the good news is, yeah, like you can come in for $100 and you're kind of really just supporting the company at that point, right? I mean, you may not make a lot of money off a $100 investment, let's be honest, but that's okay. Like you're still, supporting it. You are still getting a very small stake. You are that sort of cheerleader of the company. But there are more savvy investors that do their homework. All the information is very public on the page. Everyone has the same information. And every investment's risky. I want to underline that again, but if you want to do your homework, and we've seen investments for $100 and we've seen $10, $20, $50, $100,000 investments. In terms of how you get your money back, which is part of the question, again, it's just like any investing. It depends on the terms of the deal. If it's an equity deal, again, this is all on the internet, but typical returns I think are anywhere from 5 to 10 years, if at all. Most startups fail, so all investments are risky, but you're looking at a long timeline. Or we've done revenue share deals. So that's the other. It's called equity crowdfunding, but it's kind of a misnomer. That's why I like to call it crowd investing. I don't want to get into the weeds, but revenue share, we've done with like distilleries or restaurants, for example, where it just made sense for their business. So they're not actually giving up equity. They're quite literally just paying people back based on their future revenue. Now, again, you have to have revenue to share. I want to make that clear. That wouldn't be a good fit for someone that is like very, very early on the revenue. And then we can also, as Brian mentioned, we do something with him. We use something called a crowd safe. We now use something called a crowd note. But for purposes of this webinar, it's very similar. It's a debt instrument where you can raise a bunch of money from hundreds of investors, but they're not actually on your cap table, as Brian mentioned. They're just it's a debt line on your cap table, and then they will convert to equity at some point in the future, very much like a convertible note. So high level, we do equity raises, we do revenue share, and we do debt raises. So hopefully that answers it. Seen a couple more questions. We have about 10 minutes left. I know we're happy to go to the very end. This is great. I'm going to quickly, I should highlight the ICO question, right? I'm shocked we haven't gotten more. That's all anyone wants to talk about, right, is ICOs and tokens and cryptocurrency. Us as well. The short answer is yes, Indiegogo has entered into the token sale, ICO, cryptocurrency, whatever you want to call it, market. I don't want to get into too much detail on this call because it's about equity crowdfunding, but what we kind of see these ICOs actually is crowdfunding 3.0. So we already have the expertise in Perks crowdfunding. We've learned a lot in equity crowdfunding. We now think we have a really good position to do these token sales compliantly and properly with global reach, et cetera, and curated, all the stuff we've, again, learned from our other businesses. So we did one pre-sale in December. We've been in a lot of sort of regulatory lawyer discussions recently, like a lot of people, but we have a lot more coming this year, and I'll just leave it at that. But if you're interested in a token sale or an ICO, we do have a separate landing page, ico.indiegogo.com, and you can check that out. And learn more, feel free to reach out to us. So yeah, we are in that space. It's a little bit more complicated and different, but we were very excited about it. One more here, a great question from Nate. He said one of the values that Indiegogo has brought to perks-based crowdfunding was how it's very open without judgment or gatekeepers. That's led to a higher volume of projects, perhaps lower volume of pledges. Are you taking the same approach and spirit to equity crowdfunding? The short answer is, again, it's very different, right? Equity crowdfunding is, like I said, is heavily regulated. There's lots of laws and legal we got to follow. Perks crowdfunding, it didn't exist until we invented it, right? There wasn't any laws. It's less regulated. You can kind of do whatever you want. That's not to say that we have a very robust trust and safety team at Indiegogo. We've improved things dramatically on the perks side in terms of our review and keeping out fraud, et cetera. It's a tricky thing to do, but we do our best. But equity crowdfunding, I guess I would just say this, is that we ultimately would like to help as many businesses as possible. But we're not even in the first inning. We've just started, and we plan to build this for the long haul. And if we just opened it up to any old business and didn't curate, and let's say we put up 100 offerings and they all fail miserably, that's not good for you and it's not good for us. So I would say that we're heavy in the curation now, especially because it's still so early and we're still learning ourselves, and we're very humble about that. And we want these to be successful. So as Brian said, we partnered with him. We didn't just throw him up there and cross our fingers. We really did our best. We tried to raise as much as possible. We all learned together. That was very early, and we've learned a lot in the last year and a half. So long story short, it is curated. It is not an open platform like the perks, but I think you'll see it opening more and more as we go. I don't think it'll ever get fully open because of the regulation, but again, I would argue that it actually benefits everyone, believe it or not. So, Brian, see any that you want to jump in on? Or I'm seeing a bunch of questions come in, but I've said a lot too. We have a few more minutes here. Feel free. Let's see. I'll jump in. I'm sure Brian's reading all the questions like I am. Reading all the questions like I am.
Yeah, sorry. One of the questions on, on the exact amount of, emails. I mean, I threw out 5 or 10,000. It's just going to depend. I mean, you may have some, be coming out from under stealth and have something getting a lot of press, where you're about to be on, Shark Tank or something. I mean, there's a lot of ways to glean timing. Not least of which is, your balance, sheet, your bank account, like how much money you have in the bank. Now, one thing we didn't talk about is always add time for the end-to-end process. So the campaign ends, but there's still legal steps that have to take place before a closing when the funds are transferred into your account. And that's true of VCs. The only time it's not true is when you're working with an angel investor who writes you a check on the spot, which happens very seldomly. So do make sure that you realize that if you participate in one of these, the time to closing is not the day it comes off the website, but when it actually closes, and that's going to be different from deal to deal. As that relates, to a crowd, literally the more people you have, the more you can get the word out of, hey, invest in this. It's exciting. You really liked it. And, the other, part of it is, they can, share it, as well. And hopefully you can get some of those network effects. So there is no ironclad exact number for crowd equity fundraising, but, the sooner you're in the thousands and double-digit thousands, the better your chances are of having a successful campaign. And those could be thousands of emails that you have, direct and permissible relationships to share information with, or on your social network.
And I'll just jump in on, again, I've been in Indiegogo for 3 years. I've done both perks crowdfunding and now equity crowdfunding. And really, if I had to say, people ask us all the time, what is the key to any type of crowdfunding? It's actually quite simple in my mind. It's all about early momentum. So it's really about, you don't want to just launch to a cold start. So as Brian said, and actually something I should mention, for perks crowdfunding, some of you may know this already, but because there's no regulation there, you can promote that, hey, it's coming in 2 months, and get people excited about it and tell them it's coming. You're actually not allowed to do that because of the laws currently for Reg CF raise. So it's a little tricky, right? Where like you kind of have to start your marketing once the deal goes live. However, I told Brian and I tell everyone this is like you should still be marketing your company, right? Anything you're doing online, your social channels, etc., building your email list, getting out there, all those traditional methods, you should be doing that. Like go market your company, go build your community, go do that. And as Brian mentioned, I would 1,000% agree. That is the most important piece here, is having some sort of community. And again, Brian mentioned we took a risk with him. It was early. We loved things about it, but I think we were all nervous. Well, wait, they don't really have a community yet. And to be honest, I think it probably would have done better if we did. But that's okay. We learned, and we still were able to be successful with it. And it's always about iterating and learning. And I think our 10 years of experience have told us that this is very much a partnership. I say this a million times a day, but this is the analogy you want to think of. You want to start the fire, and then think of us as the gas on the fire. If you can start it and get it going, we can absolutely pour gas on it and make it a bonfire. But it's really hard for us to pour gas on nothing. So just keep that in mind, and I can't stress that enough, is having that community, at least some, even if it's 100 passionate people, that's better than none. Like I want to make that clear. You don't have to have 10,000 emails. You just have to have a community of engaged, passionate people that you're pretty confident would put money into this on day one. So don't get stressed with the number, like Brian said. We're running out of time, but I wanted to answer this really important one. Someone asked a great question here. Is there a parallel strategy, i.e. offer equity plus offer a physical product perk to people? Brian could probably speak better than I can, but the high-level answer there is absolutely. I did not highlight that. That's a great question. Within this equity crowdfunding or crowd investing raise, you can offer perks. So if you go look at any of the offerings we've done or are doing on equity.indiegogo.com, you'll see a perks section. Now, to be clear, this is not like perks crowdfunding. Someone can't come in and just say, I want the Play Impossible game ball. They can't do that. They have to invest. But you can use the perks to incentivize people to invest more, right? So you could say, hey, put in $100, great. Or put in $1,000 and you get X amount of equity and you get the Play Impossible game ball, for example. So absolutely, perks is a great way to incentivize investors, and it's a great way to kind of fit in both. So I think we maybe have one more. Oh, this is a shameless plug for us, but people ask, well, how are we different than other equity? I mentioned some of it, but the short answer there is, again, is the curation. Look at our success rate. We've 90+% success. A lot of our competitors will launch 100+ companies. Some of them will do well, but what I like to call the long tail of companies, if you scroll down, don't do quite well. And we really believe in that focus of like five at a time, 10 at a time, whatever we're doing. We're really committed and partnered with each of you. We're not just throwing you up on a page and crossing our fingers. And then I'd also add our experience and again, our global reach. I mean, no one can touch us on our global reach. And as Brian said, this is not only fundraising. This is very much marketing and promotion for your new early venture. You can't buy that, right? Like getting that exposure is just crucial. It's not only about the dollars and cents. So I think we're out of time. I think we're gonna share the recording. So I just want a couple of housekeeping things. Really, thanks for all the questions. I know we didn't get to them all. Check out equity.indiegogo.com. Check out ico.indiegogo.com. Check out playimpossible.com. We're gonna share a recording of the webinar with all of you after this via email. So don't worry about that. If you want to watch it again or questions, and please feel free to reach out to us via all those different websites I mentioned, and I'm sure Brian or I would love to hear from you. So really great having everyone. Thanks to Brian. Thanks to you guys. Go ahead, Brian. Say a little.
Yeah, just saying, thanks everyone for taking the time. I know how strapped you are for time, and I just want to wish all of you good luck. I know how hard it is. It's a process, and thanks, Michael, for having us.
My pleasure. Thanks, everyone. We look forward to seeing you guys soon somewhere else. But have a good one and good luck out there, as Brian said.